Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very decent day in the markets today. And in today's action, the S&P and the QQQs, unfortunately, ending red yet again. However, we did have some rotation in the markets. The bottom half of the market not doing too bad. Most of the declines, again, were led by some of our favorite big tech names. Now, in terms of today's price action, it was very volatile, violent, and all over the place. The VIX coming up to 25. The VIX was up over 10% today, and the price action was very mixed. We started off with a big gap down open here, guys. From the close yesterday to the low of the day, the S&P was down 1.5 before coming back and then selling a bit further into the close. And then the QQQs as well, from yesterday's close into the low of the day, over 2% before we made it almost all back, and then sadly once again dumped into the last hour of the day, power hour, which is where most of the institutions like to play. Now, some of the reasons behind the price action today, well, there were many. First of all, I'll just remind you guys, we're currently in extreme fear territory, 11 on this indicator right here, and we have not had those fearful reads since the month of April. So obviously the sentiment in the market right now is not very good. You can clearly hear it in the media, you can hear it on social media, and even in the YouTube comment sections, people seem to be throwing in the towel. But is it time to throw in the towel, or is this just very healthy market consolidation? Well, of course, we're going to get into that in today's video as well. In terms of the news that kind of moved the markets today, well, we had some good news and some not so good news. The not so good news overall was this morning with the ADP employment change. This is a 4-week average, something new that ADP has been providing us for the past 2 weeks. And we saw a moderate decline here of 2,500 jobs in relation to last week's minus 11.25 thousand, right? So that being said, it wasn't as bad as last week, which did contribute a little bit to bringing the Fed cut rate probabilities for the month of December to move a little bit higher, back up to 50%. Yesterday, it was at 42%. And this chart, I know there's a lot of narratives going around right now. The two most powerful ones are the AI narrative being unwound right now a little bit. But number two, obviously, is the lack of clarity surrounding on whether or not the markets are getting a rate cut in December. Now, we have a big market moving event, right? This jobs report today was very small. The biggest one, of course, is the September non-farm payrolls. Yes, September, because the October one seems to be lost forever. So we will get September on Thursday morning. It's going to be a very big day for the markets overall. So that is going to be the report that probably moves this number in a very meaningful fashion. Now, the funny thing about this non-farm payrolls report, guys, is that it kind of has to be a Goldilocks scenario non-farm payrolls report. If the jobs come in way too good, well, then the rate cut odds are pretty much going to keep plummeting and the market's not going to like that. If the jobs report comes in way too bad, well, it's going to add to the bearish narrative that the economy is currently cracking right now, and you may be heading into a larger phase of unemployment, right? So the non-farm payrolls, the best thing that could possibly happen is it comes in slightly better than expected or slightly worse, but you can't have too much variance in that or the market is going to run with it either way. In other news today, we had some good news, more deals, this time between President Trump and Saudi Arabia, announcing $1 trillion in overall investments. So that is an uptick from the $600 billion previously announced, now up to $1 trillion. That was a very good piece of news over the course of the afternoon today, which did help lift some of the indexes. We had more news out of Saudi Arabia, this time the Humane company right here, which is backed by the Saudi government as well, unveiling new deals with US firms on Wednesday. So tomorrow we could be having some price action here as a result of this news, possible multi-gigawatt data center buildouts with Amazon, AMD, XAI, and Global AI in Saudi Arabia. That could be quite interesting. And then we get into so much tech news that rocked the markets. You might see this heat map right here and think, why was Amazon down 4, Microsoft down 3? And so many other big names moving in a very large fashion? Well, here you go. You had one piece of news first on Meta, a federal judge ruling that Meta is not a monopoly. They've been in this lawsuit for the past 6 months, and they finally won, as a result, keeping the social media empire intact. So that definitely did help bring Meta out of the steep decline that they were in very early this morning. It was a big gap down open. Meta was down almost 3 again. And you can see the bulls were able to kind of buy that dip as it did release a bit of uncertainty surrounding Meta, at least surrounding their lawsuit, right? And we know those good old monopoly lawsuits can take a toll on some companies. Just ask Google. In other news, well, Meta won their lawsuit, and for every lawsuit that big tech wins, it seems as though they get other ones piled on their backs. This time, the European Union, once again, probing Amazon and Microsoft cloud services for potential curbs as part of the Digital Markets Act, which aims to curb the power of big tech and ensure a level playing field for smaller rivals. It opened 2 probes to assess if the companies should be designated as gatekeepers for their cloud services, and a 3rd investigation to assess if the DMA can effectively tackle anti-competitive practices in the cloud computing sector. If they are to be found guilty of said practices, well, the companies will be required to make their services to interoperate with rivals and are not allowed to favor their own services over other rivals' services. Companies can also be fined up to 10% of annual global turnover for the Digital Markets Act violation. So once again, the European Union slapping some probes and possibly slapping some fines as well on the big tech companies. That is some of the reason why Amazon and Microsoft was down today. Some of the other reason that Amazon was down today in a big fashion was this piece of news right here. Amazon raised some debt today, $15 billion. Now, that's kind of a drop in the water for Amazon. They've been employing debt their entire public career so far, essentially, to basically push their lines of business further. $15 billion is not a very large amount in comparison to other companies that are raising significant amount of debt capital. But once again, we know that the market has not really been appreciating these tech companies raising all of this debt in the last 2-3 weeks. Every time we get a headline, you can ask Meta, of course, every time you get a headline about another big tech company raising debt or possibly diluting shares for some of the other smaller companies, think the neo cloud providers like Nebius or Iris Energy or players like that, right? Well, the market hasn't really been too willing to accept that, even though this debt offering by Amazon was deeply oversubscribed. They got nearly $80 billion in demand, with the 40-year bond for them priced only 80 basis points above the treasuries. So the credit spread's fairly tight on Amazon's debt. So that was a bullish signal, but unfortunately, the market didn't take it that way. In other news, we had a piece of news this morning that lifted the markets. What really put a stop to a lot of this bleeding very early around 10:30 a.m., where we really started getting a nice little bounce right about here, was this piece of news right here. More big tech news. Yes, it's a big week for big tech. NVIDIA and Microsoft are expanding their ties with Anthropic. NVIDIA will be investing up to $10 billion and Microsoft up to $5 billion, while Anthropic commits to purchase $30 billion of Azure compute capacity and contract additional compute capacity up to 1 gigawatt on Grace Blackwell and Vera Rubin systems. So that did help kind of backstop the markets. Another big tech deal. Hey, it's been like 2 weeks since we've seen one, right? It appears as though prior in September and October, these things were coming out every single day. And then the last 2 weeks, we haven't really heard of many deals, but now you have another one on the table. And last but not least, something that did help one big tech name today was this right here. Google coming out with Gemini 3. And the numbers for Gemini 3 were absolutely ridiculous. Take a look at the benchmarks right here against Anthropic's Claude and against ChatGPT 5.1, the new ChatGPT. If you take a look, Google pretty much takes the cake in every single segment, almost, that they benchmarked against the other models. So really crushing it from everything from coding purposes to mathematics to just general knowledge questions overall. Gemini 3 really smashing all of those benchmarks, and additionally coming out some very, very interesting features that are, dare I say, revolutionary in the LLM game right now. Sundar Pichai posting some of the highlights on his Twitter feed this morning. You can give Gemini 3 anything, images, PDFs, scribbles, and it's going to create whatever you like. An image becomes a board game, a napkin sketch transformed into a full website, and a diagram could turn into an interactive lesson. This is really, really cool stuff, guys, honestly, right? See a picture of a chessboard, it becomes an interactive chessboard that you can play with that. And Gemini is super fast in terms of deriving anything. It's called their bring anything to life, right? You see a napkin diagram right there. Sorry, the video is a bit small. And now it's basically reading what it is. And there you go. An interactive map is now generated. So really cool stuff. Finally starting to like interact with the environment around it or with anything that you kind of give to it overall. Here you can see some sort of a engineering or architecture schematic overall, and you can basically just put that right here into their blueprint designer and reorganize things as you would want to, which is super cool. And also, I mentioned the real world, right? So it does better things than that. It will analyze, yes, if you have a terrible tennis swing or you have a terrible golf swing, Gemini will graciously tell you exactly what you are doing wrong and how you can fix it. That's really cool, right? Just really bringing the agentic side of things to life. They also built tons of other cool stuff, guys, in terms of reasoning for their search models overall, such as asking complex problems and having them visualized. So here it's asking, basically explaining a physics problem in a visualized context, and then Gemini will obviously just give you a visual representation of what the problem possibly is, how all your geometry comes together, how the different laws of physics will play together. Really cool visualization tools. Of course, I'm generalizing. There are many more examples than this. And lastly, of course, they're including some stuff that they talked about yesterday in terms of bringing an AI agent to help you with your travel plans, or many more different, AI agent features, such as managing emails or managing simple or even complex tasks on a day-to-day basis. So all in all, guys, in terms of the tech news today, that's why I said some news was good, some news was not well received by the markets overall, but it was definitely a very busy day for big tech news, and some of it did help to stop the markets early on in the morning. And some of the other news just helped kind of bring some of our favorite companies like Amazon and Microsoft down into even more attractive levels and even further decent buying opportunities. So there's a very long introduction, guys, but that's the news breakdown. In today's video, we'll be taking a look at many more things overall. Number one, we have to do a index analysis because there's a few key technical things that happened today that you guys should be paying attention to. So we'll be going through the S&P, the Qs, and our minor sectors to derive where's the rotation, where's the money moving into, how long will it last, is the correction over, tons of fantastic questions. So we'll tackle most of them when we do our sector rundown right here. Thereafter, we will go through our big tech names and do the same thing. Now that big tech has sold off quite considerably in the past 2 weeks, which of these names are good swing trade opportunities, or which of these names are also great long-term buy opportunities? I talked about a lot of these names yesterday. At the end of yesterday's video, guys, I gave 20 companies that I'm going to be buying the dips on in the next few days, next few weeks, as we continue to get more and more sell-off events in the market overall. So we take a look at the big tech names, and then at the very end of the video, guys, I will be taking you briefly through the biggest gainers and losers of the day and see if we can find any more opportunities that we haven't talked about yesterday or last week or everything in between. Which of these companies are looking pretty good for either some swing trades or some short puts, or just companies that I'm interested in possibly playing very soon. So that being said, guys, that's going to be it for today's video. Let's get right into it, shall we? The S&P down 0.84, the Qs down 1.22, but as I showed you before, it was not all bad. You can see from this list, healthcare once again holding up the markets, and the good old rotation into consumer staples. It wasn't very large, it wasn't very pronounced. The candles aren't like this, but you can definitely see some of the money flows, right? Out of big tech, out of semiconductors. Financials were roughly flat, but some of the financial components didn't do too good at all today. And the money is moving to more a defensive positioning right now. You can see that most of your semiconductors, software names, and big tech were down across the board. Our financials names were mixed. Some of the credit card companies got hit the hardest. No specific news there, just continuous sell-off of some names that have already been weak for the entire year so far, pretty much. Visa and MasterCard are now flat or red for the year, which is very, very rare. These are two of my favorite buying opportunities in the entire markets right now, despite people's concerns with them, even though they had phenomenal earnings. Healthcare continuing to be an absolute powerhouse for the markets, and the bottom half of the markets mixed, but overall did help support your S&P today. Moving on to the one-day relative, you'll see that even better. Energy, real estate, healthcare, and basic materials were higher. However, the things that were down are just a lot bigger, right? Consumer cyclicals, technology, utilities, industrials, sadly to the downside. And on the 1 week relative, well, you would expect now that the S&P is in a daily downtrend, as we can clearly see, right? And the last 5 days since the government opening have been absolutely abysmal. Well, you would expect for most of your market sectors to be in the red, and that is indeed the case. Only healthcare actually performing well, everything else to the downside, and of course led by consumer cyclicals and technology, which are the focal points of the bearish narratives right now, which right now, the two strongest ones, of course, are the jobs and consumer discretionary buying power. And number two, of course, AI. Have the companies spent too much? Is the ROI actually going to be there? Right? Is it a bubble right now? All very valid questions, very valid concerns, and very valid short-term bearish sentiment catalysts. So let's move on into the indexes. You guys know the drill, right? Today, even though there's going to be something that I point out in this chart, it comes with a little bit of a caveat, right? So I'll show you something that usually when this happens, guys, okay, it can be synonymous with a short-term local bottom of a recent leg of selling. Usually when you see a bit of a volume climax like this and a final gap down open with some nice buying pressure midway through the day, a lot of the times this can mark a temporary low for the markets, and you might just be looking for a bit of an upswing. The only problem though, well, number one, there's resistance right above us, right? 674 down to 666. You could end up doing this, but the other things are volatility catalysts. So obviously short-term price action right here, in a perfect world where this week had no big volatility catalysts, we could maybe make an assumption that we are going to get a very nice bounce. However, there's one big problem with that. The context matters a lot. And so what is the context? Well, obviously tomorrow you get NVIDIA earnings. That's going to move the market an absolute ton. Will Jensen and his beautiful leather jacket be able to save the markets and breathe some life back into the AI trade, even though he literally just did that 2 weeks ago during the GTC conference when they raised their guidance from 350 to 400 billion over the next 4 quarters? Or 6 quarters rather, they raised it to $500 billion over the next 6 quarters with tons of new interesting partnerships and tons of new software features that they're working on as well. And people loved it. And then people quickly forgot about it and started panicking. AMD just the other day, literally just the other day, Lisa Su came out and said, you know, the guidance that we gave on earnings just a few weeks ago might have been a little bit soft. So we're actually raising it again because we're just seeing too much demand. But of course, people forgot about that too. That was this candle. People forgot about it. People don't care anymore. The AI narrative is obviously dead. There's no more demand. Companies are spending money for nothing. And so they say. TSM as well, giving us a nice little hint about a week ago at this time that they had so much demand that they will be able to increase their prices 5 to 10% per year every year for the next 4 years. It should show you the size of demand that's currently underway right now, yeah? And still, the markets just forgot and just kind of bled into negative sentiment territory. So we have a clash of fundamental guidance versus the market sentiment. The market doesn't believe that all this spending is either going to be real or is actually going to lead to something, even though we are full pivoting to AI, and nothing is going to stop these companies, guys. The CEOs have been very clear on that. They will spend the money to get ahead, right? And obviously for those productivity and efficiency gains that we will be seeing down the line. Obviously, that doesn't help the short-term narrative, but it's always important to remember the fundamental thesis as to why you are buying certain companies, so as to not get shaken out by short-term momentum and short-term price action. It seems as though every single time, and I've been seeing this, guys, I've been making videos on YouTube, guys, for now about 2.5 years, right? Every single time, I started my channel back here in March of 2023, yeah? Every single time, and I mean every single time that we get a 5% pullback on the S&P for which reason, right? Whether it's these, all of these 5, 6 ones that I've covered on the channel so far, right? And even sometimes the interim events too, every single time, literally every single time, the markets will make you believe that it is absolutely the end of the world, right? It's the end of a bull market. We're going into a lost decade. It's an AI bubble. It's always something new. And the end conclusion is always the fact that we're going to go down 50% once and for all and stay there, and that you will never be able to make a single dollar in the stock market ever again, right? Where in all reality, it's not black and white like that. It is more tones of gray. You always have to understand where you currently stand in the context of short-term bearish narratives, but you also have to understand where you are in the concept, or in the context rather, of your longer-term bullish tailwinds as well. The markets are a puzzle, guys, right? Some people don't like the puzzle. Some people want the puzzle to always go up and have perfectly clear skies, but most of the money is made if you are clearly able to decipher what is at play, derive a possible game plan and a thesis, so as to be able to buy the dips and not think that the markets, every single time they drop 5%, they're necessarily going to drop 25, 30, 35%, and that's going to be the end of days, right? So you got to look at things in a stoic fashion, a very logical fashion always, and play the markets accordingly. That being said, we covered a lot of that psychological analysis in the last few days, few weeks. We gave that warning literally up here. Hopefully you guys are properly positioned, and obviously, hopefully you guys as well are able to start nibbling at some of the dips, because a lot of the our favorite companies are currently significantly off the all-time highs. And I will remind you, they all provided great guidance for this upcoming quarter and even for 2026 as well. Never forget that the markets can short-term move on short-term bearish catalysts like this, but at the end of the day, they will move on long-term fundamentals. When a company is a good deal in relation to its fundamentals, it's a good deal, right? That being said, right now, daily downtrend. This matters because it's the first of its kind. It's the first, excuse me, guys. I choked on my own passion for the markets. Moving on to the SPY right here. First time in 6 months that we have a daily downtrend. So it has to be notable to you, because a daily downtrend is not necessarily solved in 2-3 days. I mean, maybe if the jobs report and NVIDIA earnings are just so fantastic that people just FOMO right back into the markets, right? But sometimes when you get a daily downtrend and extended weekly consolidation, it can take a few weeks for the markets to kind of turn around, people to become bullish again, especially when you have a momentum cross like this on the MACD. So the bears are in short-term control. And if tomorrow and Thursday are yet another batch of red days because NVIDIA earnings are just not well received, or possibly the jobs report is not well received either, well, you will be coming lower and you'll be attacking this range of support down there, 652, 647. It is the China tariff lows, previous resistance as well, and you'll be coming in very quickly to our 26 daily moving average. We haven't broke the 12 EMA on the weekly for like 6-7 months. Now we've cracked it, so obviously things are different right now. You got to pay attention, right? That being said, if you come into the 26, every time the S&P comes into the 26 during its history, has it usually been a good context to buy, other than a great big pandemic and a market, a bear market, in which we had 8-9% inflation and the fastest rate hikes in the last 20-40 years type of thing? You just go back in history, guys. I'm a big fan of using history to your advantage. That's what helps you derive probabilities in terms of where you should be buying. Is it good to be buying down there? And how much should you be buying with, right? If you know tests of the 12 EMA are more frequent than tests of the 26, then you know that they should be nibbles here. And as you progress through the moving averages, the buys should be more significant for you, because these are lower hit rates in terms of probabilities, meaning they happen less frequently, right? Moving on to the Qs right now. Qs, same concept. It is a daily downtrend, and we are coming into support already, testing the China tariff lows, 595 down to about 590. We'll see what happens. A lot of this price action in the next few days is going to be a result of those NVIDIA earnings and the jobs report. So it's impossible for me to say, yeah, for sure, this is the bottom, we're going to bounce. Well, if NVIDIA earnings are not well received and the jobs report is not well received, you're not going to bounce. You're going to head one level lower, probably 582 down to 575. And that would be really nice consolidation. That would be a nice 8-9% pullback. Still not a correction. Correction is 10%. And you would be testing the ever so rare 26 weekly EMA, which we don't do often, but historically has been a decent time to start buying. And that would be a very nice monthly phase of consolidation, which we've been waiting for, guys. We were very extended here, very extended. Now, if you get those final catalysts, it might just be a very nice opportunity to consolidate some of our higher time frames, which is something we have not done in 6-7 months. It's going to happen eventually, guys, right? And when you have all the excuses, all the context in the world to do it now, well, they have a good shot of doing it now, right? So just stay alert and take your trades one day at a time. Don't try to speculate too much, and definitely don't be an extremist, guys. Don't think that this is the end of the market sell-off and you should be full margin, full YOLO call options right now. And also don't think that this is the beginning of the next 50% crash on the QQQs, right? You can't predict that far. You're just doing yourself a disservice when you get caught up in your emotions and you get caught up in a thesis like that. It's fine to have some positions either way, but there has to be an invalidation point to your thesis. If you are big time bearish on the markets right now, what is the invalidation point to your thesis? If you're big time bullish on the markets in the short term right now with some big time swing trades, what is your invalidation thesis? That is how you should be operating when you're trading the markets. If you're a long-term investor, the plan is so simple. Every 2 weeks you get your paycheck, 10-15% of it should go into your favorite high-quality companies or your favorite ETFs, and just dollar cost average. You have pretty much nothing to worry about, especially if you're in the markets for the next 10, 15, 20 years, right? Moving on to the XLF right now. XLF, unfortunately, weekly downtrend, and the slide simply continues at this point. Big sweeping move by the bears right now, coming into the 200-day EMA and into our support range, which is 52, down about 50.3. Big range, guys, big monthly range, right? Previous resistance highs, current support lows, and the XLF is already doing monthly consolidation. They started that last month. So this sector was kind of leading the consolidation, right, into the 12 EMA. We'll see how they're reacting from it. That's what you kind of want to see, perhaps, on the S&P. If push comes to shove, you will see the pullbacks of the 12 EMA, and it would be very healthy, in my humble opinion. Moving on to XLV Healthcare right now. XLV Healthcare still holding up well at the highs right now. The bulls holding on. The next stage of the rally could bring us into the 157, 158 all-time highs on healthcare. But if we have to take a bit of a breather and set a daily downtrend and go into a bit of weekly consolidation, it would just look all too natural, in my opinion. Down back here, 148, 145, it was the liftoff zone. Beautiful weekly uptrend. You got the breakout. Maybe you might get the back test, and the back test would possibly provide some new entries for some nice swing trade longs on healthcare. Healthcare is doing its best, man, to hold up the markets. Look at this nice monthly engulfing move, right? So, of course, with the monthly engulfing move and a monthly cross of the MACD, something that hasn't happened since 2024, we've been negative momentum on healthcare, right? It has to be notable to you. So, as a result, the bias now pivots to a bullish leaning bias. And as a result, we do want to be playing these breakout retest patterns. Moving on to semiconductors right now. Semiconductors sliding a little bit more. Daily downtrend is very clear right now overall. Flush below the 50-day EMA, which we have not lost in a while since the tariffs, right? So many things right now in the market are different. The bearish narratives are different. We have more of them than we've ever had, arguably, in the last 6 months since the tariffs. The tariffs is the last time, guys, that I did these charts. Because if not, the market's just been too easy, right? It was one narrative at a time. Here, it was only China. Back here, it was only Iran and Israel, right? And things of that nature. So there have been easier narratives to play throughout. I'm not saying that they weren't volatile nor challenging in their own respects, but now you have confluence of bearish narratives, right? So you got to do your best to kind of get everything together here to paint a good picture of where you're at in the markets and just see things clearly for what they are, yeah? So that being said, we're losing a lot of ground here on semiconductors, and on the weekly, guys, just natural consolidation. This was a very nice weekly uptrend, and now we've pulled back, finally, to the weekly 12 EMA. Now, pay attention, RSI is cooling off, the MACD might be crossing, so as a result, if NVIDIA earnings are not well received by the market, you're coming down to the 26, and this would be such a beautiful retest, guys. Get me close to this monthly 12 EMA, down here back around 300. It would be a big sell-off, I will admit that, but there's a lot of companies with room out there to sell off. ASML has room to pull back on the monthly, tons of room to be specific, right? It's not in the S&P, but I'm just showing you, right? TSM has nice room to pull back. NVIDIA has a lot of room to pull back as well. AMD has a lot of room to pull back towards its monthly consolidation phase. Names like LRCX has a lot of room to pull back. Names like Micron has a lot of room to pull back, right? So don't be scared of the pullbacks. The pullbacks are very natural. What's not natural is just going up in a straight line like this, because then you don't want to know what comes next, guys. Then you get the massive rug pulls and the sell-offs are quite violent, right? Arguably, we were just extended enough to where this pullback makes logical sense and is somewhat doable in terms of absorbing that pullback on some of your favorite names. Moving on to the Russell right now. The Russell up about 0.31%, bouncing out of support, but the bears are in full control on the daily right here. 231 down to 225. Any bounce, we'll just be looking for a lower high. Resistance, local high as well. 237 up to 240. Maybe something like this. And if the bulls are able to save, well, we'll take it from there, right? But any bounce, you got to pay attention to this resistance range. It's a big one. Weekly, clear weekly sell-off right now. Obviously, the loss of a weekly uptrend. So when you lose a weekly uptrend, it takes usually weeks and weeks and weeks to get back. So is there any rush to build positions now? No, but you should be interested possibly down here because it is a monthly backtest as well, right? Monthly time frames cooling down a little bit. We've been highlighting this area for a while. 230 down about 225. So I will be maybe interested in maybe nibbling on some of the growth companies as they move into that range down there. That's everything for your overall sector breakdown. We covered the rest in yesterday's video, so make sure you check that out in terms of broader rotation. As we said in the introduction, the VIX now pulling up into the 25 area. Phenomenal opportunity, guys, to be buying. When the VIX is high, it's time to buy. That's why this area is a green box, because if you start buying stuff when the VIX is this high, in terms of historical context, right, is it a good buying opportunity or no? The VIX is literally giving you all of the clues. I mean, this is the pandemic, so what do you want, right? This is the highest tariffs anybody's seen in 100 years, so obviously, what do you want? This is the Japanese carry trade unwind, which hasn't happened in the last 20 years. So sure, there's a market moving against like that, but for the most part, if we derive some probabilities, is it a good time to start buying down here or no? Well, the answer is yes, but it's also a decent location to be selling some put options. With the increases in volatility, you can get better distance on your strike prices for some of your favorite companies. Moving on further, in terms of your other assets such as gold, gold was actually moving incrementally higher on the Tuesday session. We were up 0.5%. So we will see, can the bulls hold this? It looks good on the charts, right? Backtest of the EMAs, backtest the prior area that we highlighted, this whole little pocket of a area that the bulls have been trying to defend, right? Also, in line with the weekly timeframes too. So we're just looking for possible continuation of the weekly uptrend. We will see what happens, of course. We know that gold is very extended on the monthly. So what you have here is a bit of time frame divergence, right? Meaning that the different time frames are showing different things. If you focus only on the monthly, we are very overbought and we're very extended, right? However, on the shorter term time frames, the bulls have recaptured the lower time frames. The key here is the weekly, right? Watch the weekly. As of right now, it's a decent area for some swing trades. If you're long here, such as I am, the stop goes below the low and you're targeting the highs. Not a bad swing trade, but it should only be viewed as such. It is a clean swing trade with a 2-to-1 risk to reward. However, the stop loss goes down there because you never know if they're going to print this as a lower high, go for the lower low, weekly downtrend, and unwind the monthly time frame. And trust me, that's why my stop loss is there, because you do not want to be in this one if it goes for the full monthly unwind, right? So there is a swing trade opportunity, but just understand that the time frames are giving you mixed signals, but the bias right now is still bullish, as that is the current break that the bulls have chosen so far. Moving on to our, I guess we can do some of the momentum indicators right now. Percentage of stocks above their 20-day EMAs, 6.71, but guys, we're still very low. So many things are telling you that it's a buying opportunity right now, right? Maybe not deploy everything, but we should be deploying something, right? Fear and greed index at 11. Percentage of stocks above their 20-day EMA. Some of the low reads that you see, usually the markets tend to bounce from here. At least that's what this chart's been showing you for the last 5 years, for the last 10 years, for the last 15, 20 years. You're coming into it, right? Percentage of stocks above their 50-day EMA. 33% in recent times. Has it been a good area to start buying some positions? Yes or no? The answer is yes, but breadth is still questionable. And percentage of stocks above their 200-day EMA, well, this one is kind of in line with what we've had several times. I wouldn't say it's in dire straits. That usually only happens when you go through weeks and weeks and weeks, dare I say like a month plus of consolidation. You'll see it with the tariff sell-off. You see it in the October 2023 sell-off when the SPY took several legs lower, right? 1, 2, 3 downswings right there. That's what I mean, right? You'll only see a percentage of stocks above their, 200-day EMAs hit some of those lows when you're really going through it, right? You have a big market moving event, a big sell-off catalyst that lasts more than a few days, more than a few weeks, arguably into like a month or two plus, right? But focus on your short-term indicators, right? Those are the ones that's going to matter. And also could be a nice directional signal for where the markets may be heading in the next few days, provided that your earnings catalyst from NVIDIA is good and the jobs data is good as well. If not, you might just see further weakness because it's not saying this is the bottom, right? You're just getting close. You're into a desirable area soon. So we should be paying attention, right? Now, moving into Bitcoin. Bitcoin trying its best to kind of find a bottom here. Bitcoin was down huge, guys, from yesterday to today. They were down another 3.5% to start off the day. They got a nice bounce in. So there is somebody playing a bit of defense down here, right? Daily oversold conditions. When the last time we got that? Last time we got that, February. It doesn't happen that often, despite the fact that Bitcoin's a volatile asset. You would assume it hits daily oversold more frequently than that. No, and we have some confluence right now. We're hitting daily oversold, but we're also hitting a nice area of price action, right? Previous support, previous resistance as well. So the bulls are clearly playing defense around here as well. And we are kind of battling with the fib levels additionally too. If you take a look right here, we're in somewhat of the pocket, right? The good old 0.5 to 0.618 into support as well. So we will see, can the bulls defend this, right? And set some monthly higher lows? Well, you're going to need some good stuff from NVIDIA, which kind of rekindles the risk on trade. And you're going to need a favorable jobs report because Bitcoin really started off falling more aggressively, guys, after we got the government reopening and the loss of the jobs data and the unwind of the Federal Reserve interest rate cut, right? These risk-on assets, the one thing that they care about the most, guys, is not the AI narrative. No, the one thing they care about the most is the risk-free rate, because that is what they're benchmarked against. Moving on to Ethereum right now. Ethereum was up on the Monday or on the Tuesday session as well, 3.14%. And now this is the following day session. So we're already into Wednesday for crypto right now. Ethereum, kind of same concept, right? Oscillating at the daily oversold conditions. Still a very clear daily downtrend, still a very clear weekly downtrend, just like Bitcoin. So to reverse this, you need to do a lot, right? Number one, you need to get the daily uptrend back. Then you can say, all right, that was a weekly low. Maybe I can play some swing trades from wherever you get that confirmation, like gold. Just like gold, right? You get the daily uptrend, then it becomes easy, right? You get the daily uptrend break. The entry usually goes on the break, or some people that are very patient wait for the retest. Stop goes below there, then you target for the weekly expansion, right? Super, super simple stuff, guys. Wait for confirmations, right? So if you're trying to call this as the absolute bottom, well, you might get lucky, but you just don't have confirmation. Some people very aggressively will set their stop loss below here and just assume that this is the bottom, but you're trading without confirmation, and sometimes that can be very dangerous. So keep that in mind. You need the bulls to confirm the daily uptrend to give you a tradable bottom, and then you go for the weekly uptrend recapture, right? And the expansion and back into this whole resistance range, 4,000, 3,700, and eventually 4,170 all the way up there, and eventually maybe even the monthly upswing too. But all this stuff, guys, it takes time, right? You got to spend several days and weeks reversing the daily. Then you got to spend several weeks reversing the weekly. Then you got to spend several months going for the actual price expansion. So none of you guys should be getting super anxious, right? In terms of building positions, you're going to have some time to do it. It's not just a simple and shallow retracement. It's a big one. And you got to turn around a whole bunch of time frames before you get confirmation that yes, indeed, that was a local tradable bottom. That's everything for your overall market rundown. Kept it short and sweet today. Now let's dive into our big tech names. All right, so moving on into good old Apple. Apple basically flat on the day. The only company not in the AI sell-off narrative because they just haven't spent any money on AI, except for the deal that they brokered to use Google's AI features inclusive into Siri in 2026. That being said, they are almost losing this. I'll give it to them because they didn't close below. But one more day like this, guys, it will be the daily downtrend, and you will be heading into a bit of weekly consolidation, which will be very natural and very normal for Apple. It is a bit extended right now, a little bit extended on the RSI. It is a very beautiful weekly uptrend for this stock right now, but we are very extended. The bulls have tried this one a few times, and let's be honest, right? A few more red days, Apple's just not going to hold up all by itself. Probably will get brought down with the rest of the market. The next area to watch is going to be around 255, 250. For the back test of the previous all-time highs and the good old weekly 12 EMA. That could also be a nice phase of monthly consolidation for Apple as well, as now it's ran really hard in the last 3-4 months. Am I buying more Apple up here? No, the valuation is a little bit too high. I did my shopping on Apple, and you guys probably did too, if you are fans of the channel, in the lower 200 range when it was, trailing the markets by a decent margin. But now we've made our buys. Now it's time to hold those buys. I'm holding Apple up here, not adding any more, not selling any more shares either, but they should have a very good Q4. At least that was their guidance recently. Moving on to good old AMD. AMD was down 4.25% despite Lisa Su's best efforts last week of calming, some investors overall. I really liked those revised guidance numbers last week, guys. It will go to show that AMD is going to be a very strong company in the next few years. Look at this EPS expansion over the next few years, guys. This is absolutely massive. They'll be what? Almost quadrupling or tripling their EPS right here in terms of revenue from this year, 34 billion up to 2028, guys. That's more than a double, 2.5 times the amount of revenue they'll be bringing in. So AMD, very strong forward numbers, but that doesn't solve anything in terms of short-term price action, right? Of course, we know that, which is why you should always buy things with a long-term thesis as well. Even if it is a swing trade, guys, you just want to know that the long-term fundamentals are there to support you. If you kind of lose this, guys, it will be a daily downtrend. Line in the sand, 225. I mean, it's very tough, right? I mean, AMD can crack this tomorrow. If NVIDIA earnings are a blowout, we'll just reclaim this and no harm, no foul. But if the market doesn't receive it well, daily downturn on AMD, maybe, I guess you can call this in a very awkward head and shoulders pattern, and that would just be more weekly consolidation for this stock. Next stop, 213 for the 12 EMA on the weekly, and then possibly 200 psychological down below. It will be very healthy monthly consolidation after a massive monthly candle during the month of October overall. And I will remind you, your supporting fundamentals are very good at 240 and under right now, guys. You're seeing it like a 1 peg and under a 10 price to sales. Very decent valuations for adding some AMD shares for the long term, but don't expect any immediate rewards. If I'm adding shares of AMD up here, I am DCAing down for sure because I want to hold these shares through the company's expansion over the next 2, 3, 4, 5 years. Moving on to Amazon really quickly. Amazon down 4.5%, and we told you guys why, right? It's a combination of this right here and the bond offering, which was really good as well, but the market just wasn't having it, especially since those are some of the market's concerns as of recently. So Amazon giving back the entire earnings move. I know. It sucks. It's very unfortunate, but hey, there's a silver lining. At least you get to accumulate more Amazon shares if you're still bullish on the company at a reduced valuation. So daily downtrend, very pronounced right now, not oversold because of how fast we ripped after earnings. Daily downtrend, the short-term bears are in control. Now we have a bit of a massive, move to the downside here in terms of retracement size. That's a big retracement, guys. A very big retracement. Almost 782 retracement, right? Meaning that unfortunately, in my opinion, even though I love this company, I mean, you just got to say it how it is, right? Probably the V shape like this might just be out of the question. You might just be looking at a more long and drawn out recovery cycle for Amazon once they do find a local bottom. Next support, 218 down about 212. We've been highlighting this area over the past few months. And once again, a great opportunity to be selling some put options perhaps, and also adding to some longer term shares down below here at these levels. So the short-term price action has been all over the place for this phenomenal company, but the one thing that's not all over the place is the valuation. We are now back below a 34 price to earnings, back below a 1.5 peg with substantial growth in all lines of business. So Amazon for me is a buy. Moving on to Google right now. Google down 0.22%. They were down a lot more, but Gemini 3 news definitely helped today. Very big range of consolidation up here, right? This doesn't look very big, but this overall is like a 6% range of consolidation. So Google looks very good. Obviously, they were helped yesterday by the big buy from Warren Buffett, $4 billion to be specific. And you're just looking for this break of the range either way, right? It's kind of like Palantir. You guys remember Palantir? They got stuck in this range here at previous highs. These were previous highs, right? Before we blasted off here. Google is kind of in the same bit of a wide range of consolidation right now, so it's tough to know which way it's going to break. If it follows the overall market, then it's going to break to the downside. If the market's able to recover, it's going to break to the upside. It's literally just that simple. I wish I had a crystal ball, but you just got to follow the price action, right? It is quite extended though. I'm not going to lie. On the daily, you don't see it very quickly, but on the weekly, you do see it definitely, right? Weekly overbought conditions on the RSI. If you get brought down, first stop is going to be probably right here, 255, lining up with previous highs and the 12 EMA. It would be a very nice consolidation phase for Google after carrying a lot of the market recently, and a very nice monthly phase of consolidation, I might add as well. Just moving a bit closer to the 12 EMA, Google has had a phenomenal run from these lows, and on the channel, we were talking about it so much back here, so hopefully you guys are sitting on tons of gains. Just don't get nervous and get shaken out of a long-term Google thesis because of some natural consolidation, right? Moving on to Meta right now. Meta down about 0.72%, but obviously this piece of news helped them today, right? Because they were a lot lower, and Meta is just still in daily oversold conditions, guys. It's still a daily downtrend. I've been advising people against calling this the bottom, right? It's only the bottom when they show you it's the bottom with a new daily uptrend. Until that time comes, it's still a daily downtrend and still weekly consolidation. In oversold conditions, meaning it's a good buy right now, right? If you combine the oversold indicators right here, it usually does prove to be a good buying opportunity for the long term, at least. And if you combine it with the valuation, Meta currently sitting under a 24 price earnings. We did it at 630, but now the stock is under 600, right? So take like 5% off of this, you're under a 24 price earnings. You're closer to a 1.5 peg. Pretty decent in my opinion. It is still a weekly downtrend though, right? And we are coming to support 560 up to about $600. So yes, I am buying some Meta shares in this location here for the long-term portfolio. I think it is one of the better buys in the market right now. It has its short-term concerns surrounding the expenses and the CapEx, but they make so much free cash flow, they can obviously afford it. 25% sell-off on Meta currently. Moving on to Microsoft right now. Microsoft down 2.7%, and they did it. They did it, guys. Sadly, they did it. They flushed the lows, guys. Months and months and months of support lows, flushed, and also daily downtrend, right? So unfortunately, daily downtrend for Microsoft, we might just be looking to tag the 200-day EMA if NVIDIA earnings are bad and if the jobs report are bad, because if NVIDIA earnings are good and the jobs report is decent, well, Microsoft might be able to just come back into the confines of their support range and try it all again to reset this daily uptrend. So we're not going to predict with so much volatility on the table. If you keep sliding though, which I assume is some people's expectations, well, you're coming down into here into the monthly 12 EMA, 473 to be specific. Has it been a good proposition to be buying Microsoft around the 12 EMA? I don't know. You guys go back on Microsoft's chart in the past, 15 years, other than a bear market in which we had 9% inflation and the fastest rate hikes that we've seen in a very long time, and a 100-year tariff, or the highest tariffs that we've ever seen in 100 years. I mean, other than those times, which are crazy times, right? Has it been a good idea to buy Microsoft around the 12 EMA? I don't know. Just go back on the chart and check, right? I will be buying Microsoft down there at the 12 EMA, but you guys do you. At that point, it'll be close to a 30 price to earnings and under a 1.8 peg. Moving on to Netflix right now. Netflix, decent bounce today, very decent bounce, 3.5%. A lot of people, guys, a lot of positioning in options recently, and it's been a very bullish split for the company just in terms of volume traded, right? Very decent volume overall, and even more on the options chain. So looking forward to see, right, what Netflix or where Netflix is going to go in the medium to long term. I do still think that we have a bullish leaning bias for long-term fundamentals. I'll remind you, I have to change these. This is the pre-split price, but it's the same, right? 1100 is 110 right now. It's running at 34 forward price to earnings, a 1.7 peg, which is not too bad. And they had really solid earnings, other than the infamous Brazilian tax dispute that I guess gave people a little bit of, a little bit of pause on the stock overall. But we're battling resistance right now, 116, then about 111. So we still need to confirm the daily uptrend right now, which would be a nice start because they lost the weekly as well, right? So first, need to get the daily back, then we need to get a nice further bounce, get the weekly uptrend back, and only then you can say, all right, the monthly lows are probably in, and we might just be looking for a bit of a rally on Netflix. Am I buying Netflix down here? You guys already know. I've been saying it for a while, right? Yes, I am. Shares of Netflix around the 12 EMA. It seems to be a pretty decent entry-level position for some further Netflix shares. I've been waiting for this since here, very patiently. Now we got the pullback to the 12. That was the plan all along, so this is where I'm buying. Moving on to NVIDIA right now. Well, of course, we don't know what's going to happen with NVIDIA. It's into support. Good old support for NVIDIA. Is Jensen going to save? Are we going to recapture some of these highs? Is Jensen going to save, but the market is just not going to want to hear it, and we dive back into these lows? I don't know, but the one thing I do know is the expected move, and if I give you guys the expected move right now, you guys will know it too. If we take a look at the expected move for NVIDIA, expected move for NVIDIA is 6.53. Let's just call it 7%, right? So 7% up or down. Jensen already gave the guidance. The guidance is going to be very strong, very strong. We will see if they blow out this quarter's numbers. We already have the guidance for the next 6 quarters. Maybe he gives us a further breakdown of how that, or the timing of that guidance. The backlog is going to be huge, right? But we will get next quarter's projections and possibly, more refined projections into margins and maybe some more operating expenses and those things into 2026. That being said, 7% to the upside, guys. You know the drill. 7% puts us right back here close to 200, and 7% down puts us right into support. That being said, NVIDIA down into here into support. I'm a big fan. If it does come down there after earnings, I will be buying. We'll cover their earnings on the channel tomorrow, I promise. It would be a loss of the weekly uptrend, and as a result, the start of monthly consolidation, which you can argue we are already into, right? At this point in time, 170 would be very close to the infamous 12 EMA. I know I'm very tiresome with the 12, guys, but the 12 EMA on the monthly is just a very perfect gauge for determining where are things, how extended are things from historical moving averages that they tend to backtest, right? It lets us know that even if we are buying NVIDIA here, maybe we should save some and be heavier down here when we actually get our level. Sometimes it doesn't come back to it, right? And that's fine, right? But as per usual, right? Always give this a double check. Sometimes when you find things that are 12, it can be the best opportunity. So we'll cover the earnings tomorrow, guys, and we'll see what we get, right? But no sense in me predicting. If you ask me, my best guesstimate, I think they're going to absolutely obliterate their numbers. But that oftentimes hasn't been enough for NVIDIA. NVIDIA obliterated their numbers last quarter. What happened? They just went down for XYZ reason. NVIDIA, what happened 2 quarters ago? They gave really good numbers, popped 4%, and then sold off, and then rallied and stayed flat for like 3 weeks. The time before that was during tariffs, so I mean, I'll give them a pass on that one. the time back here, they blew out these earnings as well back in November. What happened? Well, they kind of just went down and then sideways and then just did nothing. So, you know, NVIDIA, there was a time 2 years ago where every single quarter NVIDIA would report, they would go up 10, 12, 15%. No longer for NVIDIA, unfortunately, but I'll keep you guys posted what happens tomorrow after the close. Moving on to Tesla right now. Tesla down about 1.88%. Not too bad of a day for them. Trying their best to hold support right now, 407 down to 382, but that's a big downtrend, right? And they back tested the previous highs right there. Resistance highs right now, 428 down to roughly 415. Let's call it 430 to 415, right? If you make a bit of a move lower, guys, you're heading into the next level in terms of a weekly downtrend continuation and monthly consolidation continuation. The better area, once again, me and my good old 12 EMA. I know I sound like a broken record, but I mean, just go back in history, man. You can find so many good tests of this level to where it's more advantageous to start a position in around the 12 EMA and then go for some possible follow through, right? As opposed to moving into big volatility catalysts and saying, you know what, F it, YOLO, I'm just going to trust this support blindly, take it into NVIDIA earnings, take it into the jobs report, non-farm payrolls, and I'll take my chances. Well, if you do that, make sure you do set a stop loss, because if not, you are coming back down to that level. Moving on to Palantir right now. Palantir down 2.3%, and sadly, Palantir now in a daily downtrend and losing a very key area of support, which was the 170 up to about 190 range. Daily downtrend, loss of support. You guys know the drill. What does that mean? Well, you are also losing the weekly uptrend too. Those were your higher lows. You lost a couple things. You lost the daily uptrend, which is something that we have not done since the tariff sell-off right back there. You lost the weekly uptrend, which is something that we have not done since the tariff sell-off back there. So these things have to be notable to you. If NVIDIA does well and the jobs market is fine, then maybe we just are able to recapture this as if nothing even happened. But if that's not the case, you should be expecting, you guys guessed it, I don't even need to pull it up, the 12 EMA. I know. Well, I mean, what do you want me to say, right? It's just something that I've had a lot of fun playing in my trading career and something that backtests really, really well. So down here would be about 150 to 140 on any extended further consolidation on the SPY and the Qs. But if you want to see Palantir do this, you also are going to need to see the SPY and Qs down another 3, 4, 5% from their current levels. And that'll only happen if you get somewhat of a further macro scare, right? Moving on to SOFI right now. SOFI pulling back as well. It's just so volatile in SOFI, man. Daily downtrend, engulfing, and then reverse engulfing. So it's just all over the place on the daily timeframes right now. No time frame control whatsoever. The weekly is still in consolidation mode right now, and on the monthly too, still arguably in consolidation mode, which is the clearest time frame for me on SOFI. This is prior resistance. This is current support. 25 to 22 pocket is an area I will be looking for in terms of shares, but also in terms of selling some put options down there, and maybe, yes, even for some possible leap call options. I was telling you guys up here to take profits on your leaps, because a lot of people were asking me here, hey man, I have November, I have December call options. Should I just keep them? Should I close them? And I was saying, guys, you're getting very close to your expirations here. The markets ran really hard. It's not the worst thing to take most of your trade off the table and leave a few runners. Hopefully some of you guys listened. If not, if you round trip the profits, I'm very sorry, but maybe it teaches you a bit of a lesson in the markets, just not to trust your expirations too much and to not get overly greedy into them. But I'm pretty sure you guys made a ton of money anyways. That being said, if you find SOFI down here, decent buying opportunity. We've been saying this on the channel for the last few weeks. On to our two last ones, Uber and TSM. So Uber right now down about 1.36, almost cutting support lows. The bears trying to go for the daily downtrend shift and trying to build upon this weekly phase of consolidation and arguably the weekly downtrend as well. You could notice a bit of a head and shoulders here, and I would agree, but this area is holding on by a thread, guys. This whole $90 range holding on by a thread, but that's good. If we come a bit lower, you will give me my favorite buying opportunities, of course, where the good old 12 EMA, right? So moving down there, 84 down to about 78. This pocket right here, I will be playing probably aggressively, adding some long-term shares because the valuation is decent below there, and also doing some short puts as well. So Uber, solid company, but just kind of getting caught in the rest of the market sentiment right now as a tech stock. And TSM, lastly, TSM. So TSM is going to move probably pretty big on NVIDIA earnings tomorrow. Usually TSM moves like half of NVIDIA's expected move. If NVIDIA moves 7, TSM will probably move at least 3. That being said, who's in control? The daily bears below all of your moving averages, inclusively of the 50, which we cracked a few times back there, but the bulls were always able to recover very quickly. This time, Well, not yet, but I mean, tomorrow's NVIDIA, so maybe they pull it off again. But as of right now, the price action shows a clear daily downtrend, clear weekly consolidation, and also arguably a weekly downtrend too. And as a result, on the monthly consolidation table, yes, consolidation on the monthly, and my favorite location will once again be, I'm not even going to say it anymore, this yellow line, this mysterious yellow line, which has acted as such a nice area to be playing TSM when it comes down into it, historically speaking at least, especially during times of expansion for the company. So is NVIDIA a good buy up here at 277? Regardless of that, yeah, it's a good buy here and through 240, 250. You're never too sure if they're going to get there, right? But you just look at the valuation, right? Under 295, is it a good buy? Yeah, mid to high 20s forward multiple, and a mid ones in terms of a PEG ratio. So not too bad at all, but very tough to predict where this one's going to go. You're just going to need to see NVIDIA earnings and the jobs report, in my opinion, for further clarity on many, if not all, of these tech names, and of course, your indexes too. So that's your entire market rundown. Hopefully you guys enjoyed. Now let's spend a few moments paying our homage, saying some prayers for these stocks on the lows right now. We'll have a minute of silence for the growth names on this list right now, because although the indexes are down 3-4%, there's many people on Twitter whose portfolios are down 30-40% because they're highly leveraged in these names on margin on top of it. I mean, hey, you guys do you. If you want to do that, if you're trying to grow at all costs and you just don't care, that is perfectly fine. I will never tell you how to trade. Just understand the risks of those positions, of course. So let's move through a few names. All right, so we're going to talk about a very few key names here, because yesterday we talked about 20 of my favorite names. If you guys didn't see yesterday's video, go to the end of the video if you're interested in my names that I'll be buying soon. Very tough to swing trade this market currently, but maybe I can give you some further ideas for some names that you could pay attention to in the near-term future, depending on whether you like these types of plays. Symbotic, very fast-growing robotics company. Now, Symbotic could be very interesting as we're coming down very fast and very hard. Huge pullback from the top right there, 37%. And you guys can clearly see what's coming up, right? The good old 12-monthly EMA, previous all-time high resistance, current support as well for the stock, currently coming in to daily oversold conditions. And what I want you guys to kind of try and identify moving forward for some nice potential first entries into these stocks is when you have very big monthly sell-offs like this, big weekly sell-offs as well, try to line up daily oversold conditions with some possible support areas, with some possible long-standing moving averages. That is when you usually find confluence and could be a temporary local low that you can kind of make some trade, or rather derive some trade ideas there from, right? So Symbotic is something that's currently displaying those very same trends. Affirm is something completely different. Affirm is just a company that I like because of their valuation down here. We'd cover them after earnings at 74. They aren't my favorite buy now, pay later play, arguably. Down here, low 60s all the way down to about 50, mid 50s. Nice little pocket. If we're looking for Affirm as part of a longer-term swing trade thesis into 2026, into 2027, obviously this is a no recession thesis trade, because if you have a recession, this play is obviously going to get hit a lot. But if you are in the no recession camp, I think that Affirm could be a nice company that should be doing pretty good in 2026 and 2027 overall. Moving on a little bit further, cybersecurity, pay attention, right? Palo Alto Networks has earnings. I know this week is largely NVIDIA's time to shine, right? But Palo Alto has earnings tomorrow after the close as well. If I can find Palo Alto, you might remember that I was playing this one heavily. If I can find this one again between like 180 and 160, this little pocket, I do enjoy playing that pocket. I've played it many times with you guys on the channel all throughout this year so far. And at the end of the day, all we'd be looking for is, yes, once again, a monthly higher low into possible this nice pocket range right down there. So pay attention. If Palo Alto sells off for some reason, could be somewhat interesting to contemplate. Names like Reddit as well, fast-growing company. We covered them after earnings when they had them. We derived that in the low 200s range. It was trading at a very low PEG ratio, despite having a high price to earnings multiple. They're growing their EPS really, really rapidly right here. They're growing their ad business really rapidly. Their margins are currently insane right now. And the good old 12-month EMA, which is barely, it's in its infant stage, right? It's barely had time to form, but the 200 daily is down there. Support is down there as well. So one final flush for Reddit, get you a little bit down low on the RSI and complete the monthly extension down into this level. It could be a nice little area to kind of catch some bids on Reddit overall. Just an idea that I figured I should throw out there to you guys too. Other names like, some of the name, I don't know where it is on this list, but I'm just going to bring it up. ANET. ANET is arguably a play that you cannot get around for the data center build out. It's been performing phenomenally over the course of this year, but it ran a little bit too hot for its own good. They had phenomenal earnings, but, you know, as many other companies this quarter, if they ran too much in earnings, it was a perfect pretext to sell the stock down a little bit. You've lost the weekly uptrend, and where are you going? Where are you coming down into? Well, I mean, this beautiful yellow line right there. Couple that with possible daily oversold conditions, and you might find some decent first entry opportunities down here in the low 100s for this stock that just recently, about a month or a half ago, right, was a good margin higher. If you find it down there, it'd be 30% from the top. ANET, a institutional favored play for the data center rally. AppLovin, another company we covered after their earnings November the 5th. We derived that at the 620 level. It was a bit rich in terms of price to sales, good in terms of a PEG ratio, but that's because they're growing EPS so fast, right? However, if you get a nice technical entry on AppLovin down here into the mid 400s, as I was saying after the earnings, if I can find it down here, I might get a little bit interested. So pay attention. If you can line that up with daily oversold conditions and a monthly higher low in terms of your 12 EMA profile, it could be a very honorable mention right there as well for that stock. So we're kind of just highlighting some of the main things that are coming to mind right now. Of course, we can talk about these because we haven't talked about them in 2 hours, and I'm sure you guys are clear or rather curious about them, right? So we have some daily downtrends. We have some weekly downtrends on NBIS, right? So it's going to take a while kind of turn these around. Maybe NVIDIA can help a little bit. However, if you pull back down here into, prior areas such as the mid to low 70s, not a bad time to be bidding on NBIS from the lows to the top, and a fib retracement, that would be a 50 down to a 618. So I'm a fan of bidding NBIS, like low 80s down to 70, decent location, but you got to be bidding these with a long-term time horizon in mind. If your guys' favorite play is Iris Energy, you just use kind of the same logic, right? You're looking for a possible 50 or possible all the way down to a 618 retracement. So Iris Energy in the low 40s, a bit more weekly consolidation, cooling off the time frames. And if you can line that up with one additional leg, possibly of selling into oversold conditions, you might end up with a decent buying location. You can apply that same logic to whatever you like. Bloom Energy, CIFR, APLD, just kind of line up the tips and tricks that I've been giving you guys over the course of this video, and you should have a pretty good plan as to where you might want to be throwing in either some short put contracts if that's your thing, or an area that you should be looking into if it comes down into there, to watch the price action carefully and see how it reacts out of those zones. As well, I mean, we talked about it yesterday, but I'll bring it up again. Grab, decent pullback on Grab right now, coming into previous big resistance, which is currently big support for the bulls right now. It's not, it's not the best. Grab's just been pulled down with the rest of the market, but I like this one overall. Can we dip a bit lower under 5? Sure, but I do enjoy this play as kind of just like something that's outside of US big tech and outside of US data center plays. Shout out to Mercado Libre as well, in that same category of international plays that are quite interesting to me. Very interesting long-term portfolio pickup down here into the low 2000s, 26 EMA touch. Prior area of price action, low valuation as well, which you covered after earnings. Very interesting play. So I know there's many, many, many more, but a lot of them we covered yesterday or in the previous few days. I'm just highlighting some that I like a lot. Rubrik as well. Rubrik, in my opinion, is a decent pickup down here. It's been just selling off the last 4, 5, 6 months from its highs, right? And right now, we're into some nice price action with a pretty decent price to sales in relation to the rest of the industry, right? So we'll see how this one moves. Additionally, we might consider Rocket Lab for some of the guys that really enjoy this name. It's not for everybody, but if it is your type of play, you might consider it, right? We're coming back into the infamous 12 EMA. We're doing so in the context of daily oversold conditions, right? We have one final area of support. So if we're looking to build, some shares for the long term or whatnot, decent entry opportunity, right? 40s down about the mid 30s location, this little pocket, decent area to start bidding, right? At least you know that you're finding several areas of confluence, long-standing moving averages, daily oversold conditions, right? And you are selling off from the top right now. That's like 44%. It's a pretty decent discount, right? So it's okay to nibble on some of these plays if they're interesting to you overall. So I figured I should cover them and what I would be looking for to kind of nibble on them respectively, right? So we already covered so many of these other names and why some names are better than others. Oscar Health, not that bad right down here for a bid, maybe for some short puts or for some shares if you guys are into this company as well. Long-standing area of support, pretty good. We came down pretty hard into oversold conditions and we're now bouncing a little bit. Can we get stuck in this range here for a little bit? Yeah, but at least we waited patiently for a full retracement into oversold conditions, into a massive area of support, at an area that's a bit more favorable in terms of valuation at all. So those are just some plays that I'm kind of interested in the future. We covered many, many more in yesterday's video, so make sure you go to the end of yesterday's video and kind of watch those. But just to keep this one a bit short and sweet today, because tomorrow, obviously, all these names are going to move huge after NVIDIA earnings, et cetera, and we'll see kind of what's left on the table after tomorrow's big earnings release, and of course, after the non-farm payrolls jobs report on Thursday, which is going to move the market in a very wild fashion in either direction, in my opinion. So I'm a bit hesitant to call out local areas to build some heavy swing trades or whatnot, especially in the face of volatility, which is why I really haven't done much trading so far at all this week. I came into this week with a plan of not really doing too much until I get NVIDIA's earnings and the non-farm payrolls, which are the two biggest catalysts that we have for the foreseeable future, right? And as a result, I'm kind of waiting to position. I got some decent buying power right now. I'm running some trades, but for the most part this week, I've been keeping it very light, and possibly you guys have too as well, if that is the way that you like to kind of just wait for the volatility events, and then we can kind of position, right? So that being said, that's everything I had for you guys today. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider also subscribing to the channel if you're new. We do these videos every Monday to Friday after the close. And last but not least, if you have any questions, please leave them down below, and I'll do my best to answer them over the course of the day tonight or possibly tomorrow as well. So my pleasure as always, guys. Hopefully you enjoyed the video. And if you are tired of trading and investing in these markets all by yourself and going through these volatility events all by yourself, you may consider joining a trading and investing community such as ours. The link to join us in our community of over 300 members is down below in the video description. In the community, you get access to a few different things. Number one, you get access to, of course, all of my trades, whether it's the wheel trades, so some short puts, some debit spreads, some credit spreads, some swing trades with shares, small cap stuff, leap call contracts, and all of my long-term portfolio buys as well. You get access to all of them. Here's just a lot of the trades that we've made in the past few months. The green little check marks are wins, red little circles are small losses, and the little targets are assignments. So here's just a lot of the trades that we've made over the past few months. As I said, you get all of them in real time as soon as they make them across my different portfolios. Additionally, guys, you get access to our private morning live streams. So every Monday to Friday, I trade the markets live in the morning from the open for about 2-3 hours. I trade live, and then I take all your questions on your stocks, your options, or your long-term portfolios. So if you want to ask me all your questions on your stuff and get my direct inputs with the charts, with the fundamentals, with the technicals, and why I believe that to be, or the why behind my answer, essentially, which is much easier than me just typing a reply to your comment, right? That's the best place to do it. Additionally, you get access to our private video educational section. That's where I have over 15 hours of educational content. How I do my technical analysis, how I do my fundamental analysis, how do I build a long-term portfolio, how do I do my leap call options, my spreads, other wheel strategies. All of my strategy videos and educational content are all in there, and our members really enjoy that section a ton. Additionally, you can ask me all your questions in our chat rooms all throughout the day, and I'm pretty quick to respond as well. And last but not least, well, many other things, but another nice little bonus is you get access to all of my watch lists, and all of my charts. So whenever you see charts like Amazon with a bunch of support resistance boxes on it and a fundamental analysis breakdown, and you just want to copy and paste it, well, you get access to all of it. You can copy paste all the watch lists and all of my charts. I have hundreds of charts with a bunch of technicals and fundamentals on them. It takes 15-20 seconds, a couple clicks of a button, and all those charts become yours. And so if any of that interests you guys, as I said, the link to join us in the community, we'd love to have you in there, is down below in the video description. And if not, I will see you guys right back here on the channel. That's it for me. Have a very good day of trading in the markets tomorrow. And I will see you guys tomorrow after the close with some pretty big earnings. So let's see how it goes. So take care, guys. See you tomorrow. Peace.